Today, we welcome back Peter Hager, President and CEO of electronic Servitor Publication Network. The company trades on the OTCQB, and their ticker symbol is XESP. XESP is a digital engagement company providing digital activation and customer engagement solutions that drive growth for B2B companies across multiple verticals. Welcome back to the program, Peter. We look forward to your business update.
Excited to be here, Anna. Thank you for having me. Hope everybody's having a great conference. First, for a little housekeeping, everybody obviously has a forward-looking statement. All investments carry some form of risk, and please do your due diligence. Just by way of update today, we should have 5-6 minutes of updates from a business perspective, and then Anna, hopefully I'll be able to throw it back to you for a few questions. Very excited to be here, and just to, again, set context for those that might be just experiencing XESP for the first time. We connect B2B companies with their customers and drive growth. The company needs to be understood. The company was formed out of a spin-out, actually, in the end of 21. There was a public company. They wanted to go private. We wanted to take some technology public. We did that in 21. We did it under the context of bringing technologies together that could leverage, cutting-edge technologies to drive much more growth than people were getting from their tools and technology today. We focus in on two key areas, both B2B and B2B2C, but I think more importantly, complex sales, and we manage that complex sales with our own technology. The clients that we target have a growth objective at least of 10 million or greater, and you can find a lot more information, just go to our website, xespn.com. The service offering we have, we provide it as a managed service, which means it's our resources that we bring to bear along with our own technology. We did that for two reasons. One, we wanted to de-risk it for the customers, for our clients, and we also wanted to have shared risk. Our voice of customers said, they want their providers, they want their business partners to have shared risk in the game. So we built the model as such. The digital engagement engine, which I'll get into, is our core and flagship technology that really manages the digital interactions in a much more sophisticated way than almost all the tools that are out there today. And if you think about it in a different way, it's the end of selling you tools and technology. It's about buying a service and buying an outcome. Inside the digital engagement engine, you'll find that it has AI and machine learning and deep math. It has all of the things needed in order to manage the interaction. So we really built it as a modern business model, right? The results are most of our customers already have marketing teams and people, and they're trying to do it themselves, but as a managed service, we seamlessly blend in with them. We also do this and offering it through channel partners, people that they trust, and I'll get into that a little bit, how we've onboarded channel partners. So if you think about digital engagement, just in its basic sense yesterday, it was very, very simple. We really only had to manage three things. You had your business and you had these digital pipes that were out there. At the end of the pipe was contact, right? You want to interact with. You had content that would flow back and forth, and you managed the interactions. What we found with the digital engagement engine is we could take this way up a level, and we break it into two distinct areas. How do we engage the marketplace digitally, and how do we activate them? So if you think about, rather than just contacts and content, we look at people as individuals. We build workflows to make sure we know who we're talking with and what we're saying. And in that message, we go into the genomic level, make sure that the message is relevant. With that being relevant, we make sure that we're constantly creating the best interaction. And this is all embedded in the tech stack that we bring to bear. So let's talk about what's exciting since the last time we were together. We have finally completed our 2 acquisitions, and those acquisitions gave us some substantial intellectual property within the company. We also onboarded our first 3 clients. We onboarded 2 channel partners, and I want to just distinguish channel partners. Those could be marketing agencies, digital agencies, and content providers. We've onboarded 2 of those. And we also onboarded an affiliate and started an affiliate program. Think of an affiliate as a kind of a tangential service. So it could be an agent, it could be somebody in your accounting or practice, but professional services. They're not directly working with digital or creating content, but they do work with our customers and our trusted sources. So we've onboarded quite a few people. We've onboarded customers, as we said we would. We have a significant growth in our pipeline. And I think also it's exciting for expanding into additional markets being served. We started off in esports and e-gaming. Now we're really developing throughout sports and all entertainment, med tech, professional services, technology, and also pharma. For investors or shareholders, the expectations for the first half of 2024 are really as follows, right? So our economics for average revenue per client is still at $650,000, gross margin a little bit over 60%. We want to have 10 clients onboarded by the first half of the year. Revenue target is slightly upgraded to be at $3.25 billion. Our expectations will be we'll continue to search out channel partners that are trusted and we'll onboard them. We'll also integrate our service almost as a white label inside of them. Think of Intel Inside model. We'll continue to expand down the market that we talked about. And we will always look at expanding our intellectual property to drive both asset value and customer value. So again, we've acquired intellectual property, we've onboarded people, we've onboarded clients, and continue to drive growth as we had suggested we would at our last meeting. Anna, I will toss it back to you.
Great. Thank you, Peter. Okay. Let's start with this simple business question. Explain why B2B companies engage XESP, considering many of them probably already have marketing teams and digital tools in place.
So I think that's a very good question and a logical one that we get quite often. Let's face facts. The B2B teams that we engage with, they're overloaded, right? They're under-resourced. And the tools can only get them so far. I think most importantly, the tools aren't accountable for the results the people are. So we almost feel like the businesses and the people, they're really fed up with being sold tools with zero accountability for results. We're different because we have skin in the game. And again, if you look at that modern business model, our managed service is outcome-based. You pay for the outcome, growth. We're not going to sell you technology and then leave. We stay involved with the team, help you achieve the results that you're looking for. So for us, it's really about working with and integrating with customer teams in almost a near effortless way and taking that growth to the next level. If I had to sum it up in one word, the reason why B2B companies engage with results.
And it seems like it's the topic of everyone's conversation right now, digital transformation. So where do you see this heading in the B2B space?
Yeah, we spoke about this a little bit last time, and I said you better transform or you'll be a dinosaur. Let's restate this. Don't underestimate digital transformation, but also don't overthink it, right? Version 1 is better than version none. You have to start now or your customers are going to disrupt you. Where XESP really fits in this intersection where digital transformation meets business transformation. So we're leveraging digital as a competitive advantage for our customers. Digital transformation, I would look at it more as it's the optimization of your processes, whereas business transformation is the connection of those digital processes. And those connections drive efficiencies, they drive margin preservation and top line growth. And our investors and shareholders, they're very excited that we're not only a leader, but we're at the epicenter of those two transitions.
When we're talking about AI, how do you see the AI landscape developing over the next few years and how you're integrating it?
I think this is what everybody has been talking about. So the only thing that we would really add is first of all, beyond the doom and gloom, let's get beyond the naysayers. So certain positions are going to be eliminated and consolidated as any new technology can disrupt. But at the same time, many new roles are going to be created, and those haven't been defined yet. But they're going to take advantage of the innovations that AI has. So we see it as being a shift from task-oriented to outcome-oriented roles. And really, that's that business transformation that we talked about. I would say this, there's really going to be a shift from people talking about AI to actually applying it. And those that are applying AI, they're going to be the leaders. They're definitely going to dominate. They're going to create a much wider gap between those that are just talking about it or those that refuse to do digital transformation.
And so talk about the XESP, how you are positioned for this AI evolution.
Yeah, you know, we always wanted to be a leader in this space, right? We were digital first. So our business model, it's focused to take advantage of it, right? I would say AI was natively built in the digital engagement engine, and that's also why we delivered it as a managed service. We really didn't want to scare people, and we didn't want to have too much friction when people wanted to make the decision to engage us, right? So by building it in and just having it work, it absolutely is seamless for our customers. The customers gain really immediate results, and they don't have the risks or any of the costs or fear of implementing it themselves. And I would say second, we'll always employ best practices in whatever is needed to drive customer growth. AI is obviously playing an integral role in that. It really helps us identify those best practices and help keep us fresh and in employing them to make sure that we're delivering growth.
And last question, probably due to time, recent SEC filings describe the finalization of M&A activity. Why is that important?
So we're, again, very excited about the acquisition. And last time we talked about we were underway in a definitive agreement. But ultimately, the underlying technology that was acquired from PhyTech and PointWord, it really gives additional capabilities and strength in two key areas, right? PointWord really helps with that digital engagement side, and the PhyTech technology helps with digital activation. So the acquisitions not only help us to drive growth for our customers, but it adds to our asset portfolio of IP, which strengthens our value inherently. And finally, I would say that our business demands speed, efficiency, and results. These acquisitions allow us to maintain our edge and actually widen the gap.
Peter, do you have any closing remarks? We got about a minute. We'd love to hear some final thoughts.
You know, the common question that we have is, how difficult is it to implement or to engage with XESP? And I would say anecdotally that our customers are absolutely delighted. In a matter of hours, we're able to sit down, understand their business processes. We program that into our workflow, and before long, we're integrating with their digital tools and technologies and driving growth. So I'd encourage people to contact us, understand the ease by which we can really implement and take advantage of the technology today.
Wonderful. Well, thank you so much for this update, Peter. We look forward to more in the future.
Thanks, Anna. Talk to you in 90 days.
Okay. All right. Stay with us, everyone, and we'll be right back with our last presenter.